Hello and welcome back to the sentiment analysis for the week of June 14th. This week has turned out to be very interesting, or I should say this last week. The coming week shows some really fascinating possibilities and potentials. So let's get into it. Let's start off with my live charts on my own trading Euro USD. I have up the activity screen, which shows quite a bit. But let's get into the fact that really not a lot has changed as we might have expected. And yet it is an entirely different setup. As we look at the chart on the screen, I have this zoomed out a little bit so we can still see the upper and lower yellow lines, which is my long-term range of where my trading is. This is the most important aspect of my whole process that I start with. When I actually look at what I'm trading, I want to see the range. Remember that 15% of the time, the market is going to go in your direction. Whether that is upward or downwards, long or short, it doesn't matter. 15% of the time, you can expect the market to go in your direction. The trend. 15% of the time, you can expect the market to absolutely despise your utter existence and go exactly against your trend. Meaning it will, point blank, not like you. If you buy and you want a long position, it will go short just because it can. Vice versa is equally as true. So 15% is in your favor, 15% is directly against you. But then we get to the bigger part of the market. 70% of the market is always a range. That is good. That is actually wonderful. Because if you take this approach, then you can build a strategy that keeps you in the market 85% of the time. So if you can actually make a strategy that handles your direction and a ranged market, you can be in the market 85% of the time. That is important because the number of trades you make is part of your profit system. If you're only in the market 15% of the time, you're not going to make a significant amount of money unless you have significantly high position sizes to make up for the time you're not in the market. For reference, that honestly isn't good or bad. It's about risk. And if your risk says that's the most important factor, that's fine. I prefer to lower my risk by lowering my position size and staying in the market more frequently. But that means understanding that risk. So looking at the chart we have on the screen, with the yellow lower line and the yellow upper line, I am in this dominant range. The blue line on the screen shows where we have been the last several months, the intermediate range. This is where I have been focusing my attention for my trading, but still keeping my long-term plan in motion. But here is where we see some changes from last week to this week, potentially affecting next week. So let's get into the real details of the order book. Looking at this part here, let's start by opening up the window so we can get a better view of the order book. There's some very critical things we need to really look at when it comes to trading this market. One of which is where the order book has a very strong cutoff, meaning we can clearly see where price is. Unlike previous order books that we've looked at last week, the week before, where the price itself of the market was a clear indicator of the separation of what we expected for prices to move. This week, when we look at the pricing, we can clearly see that the order book has been really set up very different. And we actually have a very different looking market coming up. That is the important part we need to focus on. But first, let's look at the long term right in this region on the screen. We see above the orange line the bulk of the order book, where all of the active traders have placed their limit orders in one form or another. And then we see below it the long-term traders for either looking to get into the market through shorts or looking for better buying opportunities for hedging deeper market transitions. So now that we can see that difference, let's zoom in a little bit more. Okay, now we see the same part just blown up. We see down at the bottom of the screen that transition of the order book. The upper and the lower part of the screens showing that differential I just discussed. But we have the part that really matters. The part of the order book for next week. For what I believe will set the week based upon what we clearly see in the order book. So looking at the price, the dotted line, and we follow it across, we have a very clear representation of what the market is doing. For previous weeks, most of the weight of the market has been below the current price. That is, we didn't have a lot of activity above it like we see today. That is important because that activity shows where the buyers and sellers want the market to go. So focusing only on the order book alone, using the dashed line of the current market price, we see a lot more activity on the sell side of the order book than we have previously. Previously, we saw markets that showed very thin sell sides above the price action. Most everything wanted lower values. So we have a clear representation of where people bought into the market, and now they're looking for a rebound to sell out of the market at these levels. That's important because that shows that even though we are in a downward candle right now, that next week shows significant pressure from these sellers and buyers to drive market price up. Whether or not they're going to turn this month green is a different story, but we can clearly see from the actual market metrics that price will go up within the ranges we see on the screen, roughly the 1.8 range. So we clearly have a very distinct approach. That is 1.18. So as we look at this market, this part right here is the telling part. This shows just how much pressure is above that market. Now when we look at the buy side of the market, we clearly see something else as well. We see a lot of pressure for what looks like limit orders for opening shorts. So we can clearly see the possibility of a week after effect of potentially looking for the market to go downward again. But we have that dynamic where we are either going to see another range over the next couple of weeks versus a potential reversal uptrend like what we saw back in November. So let's really look at this chart and see if we can get an idea of what to expect. So I'm going to zoom out a little, or zoom over, and we can clearly see a minor uptrend, and then a major uptrend on the chart itself. But we've been in that static stage for quite a while. And that's where I think we're going to stay for a little bit longer at least. I would suggest, even hypothesize, that this particular ranged trend is going to stay throughout the entire summer. I don't think we're going to go above the yellow line, and I don't think we're going to go below the blue line. Not saying it's not possible, but looking at the order book and the pattern established, I think there's a high probability that we're going to maintain this current traction. So after looking at the monthly chart, let's go down to the weekly chart and see if it also shows the same kind of information. Okay, looking at the weekly chart, we see pretty much the same thing. We see last week's downturn, last several weeks pattern, but we see the last candle showing that upturn. That's important because that's where we're at now. Starting next week, I think the continuation of that upturn. And I think that is the critical component that we have. The upturn itself will, I think, stay within the greater range we have been. We have an established upper resistance region on the chart, and I don't think at this point we're going to blow past that resistance. The order book doesn't seem to suggest it. Now that doesn't necessarily mean much long term, but for at least the short term, the next week or so, I think it's a good indicator of where the market is going to be. With that being said, now let's look at the daily chart. Looking at the daily chart, we really see the order book in relation to the current price and just how that is actually pursuing the overall effect. But we also see, even though that the week is up, we see that the last day's session was trending downward or bearish. So that again supports that there might be some transitioning there that may not necessarily be a big movement, but still enough of a movement to capture trades, to capture opportunities. From the daily standpoint, I would suggest this looks more like a range altogether, the continuation of that range, where I think if we look back, we can clearly see where it's been functioning within the market itself. But again, this is not a forecast because that's not realistic. This is just looking at the order book in context of where sellers and buyers have actually placed their own orders. And the interesting part is when you look on the seller side, above the price line, we see the order book is pretty dense. But below the price line, in the section I've highlighted on the screen, we actually see the order book is not that dense. That's an interesting transition from what we have seen previously within the market, where the order book is dense both above and below, or strictly dense below the price line. So we have the clear indication of where sellers are looking and what they hope and expect the market will follow based upon the actual orders that have been placed. That is really the most critical component of the entire discussion that I think we need to have in relation to what is going to happen next week. Moving back to the monthly chart, I want to emphasize that as we look at each of these data points, these aren't different data points, just different points of view or perspectives to what the market is actually doing. That is, the monthly chart is really just showing the 4 candles of the weekly chart or the 30 candles of the daily chart in a compressed form. that is the contextualization that I think we need to really keep realistic within the actual market itself. We're not looking at different data. We're looking at the same data from a different point of view. Much like a chess master would look at the table from the perspective of the white side versus the black side to figure out the next moves and planning. That is basically what we are doing here. We are trying to decide the best approach. And I think having a realistic uptick or uptrend over the next week is realistic with what we see in the order book. Share your thoughts though. What do you see? What has your trading actually demonstrated? Looking at my own live trading account, we can see that not much has really changed here. It's pretty much the same as what it was last week, with very little actual transitions. So for me, the market has been very slow. In fact, June itself, I've only gained $1.9 of profit. So it's been a slow month. But if we look at the other months, you can see that I am below average, meaning volatility has been slower than normal. There are a few months that have been above average or higher volatility, but that is the transitioning of the market in the directions that I demonstrated on the chart. But the big truth, the telling truth, is the duration cycle. Now, we've talked about this before in terms of how duration can be used to really look at the subjectiveness of the market. So let's really look at that. We can see on this particular screen the dates and timings of the last two compared to the previous entries. We can see the transitions of the number of sales per week. For example, the number of June 5th sales versus June 11th and 12th. We can see how that worked out overall. So in terms of the market downtrend, we had the downtrend last week, but now we're kind of turning around. That's what the charts are showing. We're slowing down. We're coming to the bend of the market where that uptrend might take place. Now this could be a fake out legitimately, and then the market continues downward more. But we don't know that yet. What we know is that the market selling rate is slowing down. That is clear in the evidence of the data we have from our actual trades. We have the information from the order book showing more activity above the price line that pushes the idea of a market uptrend over the next week. So as we continue looking at the market, I think that's where we're at now. I think we can see an uptrend next week that may turn into either a deeper uptrend or just another part of the longer duration cycle. But I think really that gets to where we have to question what are we looking for in the market. And I personally believe the best place to be is always in a range. Find the range because then you have consistent patterns. Those consistent patterns can be traded and repeated multiple times. If we can do that, then we have a good opportunity of profiting 85% of the time. At either rate, let me know what you think. Share your thoughts. Leave a comment. Thank you for watching.